In California, it says if you're buying an insurance policy that is covering you for long-term disability, we, the state of California, will define what that means. What it means is your inability to perform your substantial and material duties in the usual and customary manner and with reasonable continuity. Boy, that's a mouthful. But the bottom line is, if you can't do what you were doing the way you were doing it, you're totally disabled in California. Doesn't make any difference what the policy says, because state law overrules the language of an insurance policy. Most states, many states, I should say, also have definitions of total disability. And sometimes they're a little bit different. Insurance, it's an ongoing process. Insurance companies come back and they say, well, maybe that's a definition of total disability, but we're going to add a residual or partial disability provision in the policy. You're going to pay more money, but now we're going to cover you for partial disability as well. Doesn't that sound like a good deal? Oh, yeah, that sounds like a really good deal. It's not a good deal. It's a terrible deal. Why? Because now they put a provision in the policy that says you are not totally disabled if you're partially disabled. And you're partially disabled even if you can't perform your substantial and material duties, if you can perform some of your substantial and material duties. Now, if your eyes are starting to glaze over at this point, you're not alone. Most of the lawyers in the country don't understand what I'm talking about. And most insurance companies don't understand it either. The reality of the situation is that if an insurance company tries to pay you partial disability, there's a reason. And the reason is they only have to pay you a portion of what they would have to pay if you were totally disabled.